Joe Brusuelas is here, our on-staff economist here. I mean, what is your bottom line from all the data points that we just ran through this morning?
Okay, what I see is that we're going to get actually something we haven't seen in a couple weeks, which is we're going to get people revising their growth forecast upward in the third quarter. So that's a fundamentally good thing. In the retail sale report, what I call the super core, excluding gas, buildings, and autos, we got a 0.6% increase. That's going to support growth here in the quarter. And what we need to see now is a follow-on effect. We need to see, firms start to engage in a little confidence, build, capital orders, build cap expenditures, and begin to hire. We're at that point now where we should start to see a little bit of a turn with a little bit more hiring, and that will sort of get us on a better path here at the final part of the year.
And yeah, that NFIB survey this morning showed that, while there seems to be more optimism out there, that's not necessarily translating to more hiring.
Well, see, this is the thing, is that this retail sales report should, in the next NFIB report, actually cause confidence to increase, because the problem, according to Bill Dunkelberg over at NFIB, it's not tight credit conditions, it's that small firms don't have the confidence that demand's going to be there to go ahead and engage in that expansion. These sort of reports that we've seen today and really over the past 10 days should begin to build a little bit of momentum, and I think that's something we want to watch closely.
33% said that their sales had gone down, 42% said that their profits had gone down.
Yeah.
And we did see a rise in department store sales in the month, so maybe people went away from some of the smaller businesses, but as Joe says, should raise confidence. The big question is, do you get hiring and do you get income growth to keep this going? Income's up 0.3 over the last year, but that's only half the rate of the average for the last 50 years. So we need some more income growth, which comes from job growth.
Talk to me about the seasonal factor here, Joe, because it is back to school season. Yeah. If people were going to buy at any point at these department stores, it was going to be buying for their kids, and it was going to be right now because they're forced to. Do we, to a certain extent, need to have a grain of salt here in seeing these as better than expected?
Sure. We have to say, okay, look, we did get that aggressive discounting. We got those sales tax holidays. But look, I would expect that we're going to see more experimentation with discounting and probably some sales tax holidays, or maybe even some relief from the federal government. So I think that,
What do you mean by that? Some sort of
I think that, yeah, we're going to be talking
check to the consumer?
Maybe a payroll tax holiday,
okay.
Maybe some others, Bush era tax, to the consumer. I think that we're now to the point where in Washington they're focused not just on the election but what's going to happen next year. And I think there's a growing likelihood we're going to see something soon.
Interesting thing though is that the last three reports that we've gotten that were really good, trade, inventories, and retail sales, they all go into GDP and they're all better than expected. So it suggests that at least we're not going to be going back into double dip, and we will probably come in better than expected, better than we did in the second quarter, the 1.6% annual rate of growth. So the question is, how much better, and will that take some of the political pressure off in Washington?
We will see. Thank you both, gentlemen, for running us through this number as it breaks and giving us some context.